What a crazy day it was today, guys. Wow, amazing. In line with our expectations, in line with our bullish counts, in line with our everything that we've been talking about in this channel, guys. If you've been following me here on YouTube, you will know that this is the move that we were looking for. Our SPY calls have come back to life. We are in the positive again on those SPY calls, and we are above 400, a number we haven't seen in quite a while. Guys, will the market rip from here? Will the market continue on higher? It's anybody's guess at this point, but the good news is that our Elliott wave analysis is suggesting that we can continue higher. Tomorrow we have another economic data, which is the GDP data coming out at 8:30 a.m. Should kind of confirm what Powell said today in regards to the U.S. economy being in a recession, that he doesn't think we are in a recession. If you guys heard the press release and the announcement, guys, please, you know what I'm talking about. But if you didn't, please go on and take a look, because it was pretty epic. It was crazy. The markets are now pricing in 50 basis points for the next meeting in September. There's a lot that can happen between now and then, but it is expected that that CPI can also decrease, or that inflation has peaked rather, for the month of July. Now, the markets may have bottomed, guys. The markets may have bottomed, and this is exactly what I've been sharing here with you guys. Free content. If you guys are not listening, please start doing so, because I take very serious what I do here in this YouTube channel. All right, guys, join Trending Waves. The link to the Discord group is pinned in the comments section. If you guys want everyday Elliott wave analysis for these charts, or any charts that you guys like. So back to this chart here, there is another count. There is an alternative that suggests that we have topped in this cycle here. Instead of this being the wave 1 and 2, as you see in the screen, this is actually all of wave 1, and we're going to drop into the wave 2, at which point it'll be a bear trap. Okay, guys, it'll be a bear trap, because that's what people will start panicking, start short selling in anticipation of the break of June the 17th flow, which in this case right now, if we are bullish, marks the bottom of this entire wave 2 cycle. All right, quickly taking a look at the daily time frame for our moving averages. Let's see where we are at the moment. We are very much so above the wave 2, sorry, the 50-day period moving average. We are approaching the 100-day period moving average, and we are going to try to make way towards our 430 mark at the 200-day period moving average, at which point the markets will be closer to our previous high. Guys, this is getting crazy. So let's dive into the analysis. You guys should be excited. I'm pretty excited because August will be epic, and I hope you guys can profit. Now, back down to the 1 hour time frame, guys. Let's take a look at what we've been looking at. So this whole count will suggest that if the 362.38, which is this region here, if price falls below it, then this whole bullish count is invalidated. We have a long way to go from there, right? So what I'm looking for, guys, is that when I take it down to a 30-minute time frame, being that this is 1, A, B, C into 2, this whole cycle is the beginning of the third wave. So where is that third wave going to potentially take us? For that, we're going to map out our wave counts in the 30-minute time frame, and we're going to dissect this whole move from our July 14th flow. So 30-minute time frame, guys, and this is what we're looking for, right? Wave 1 has completed on July 22nd. A, B, C pullback into a 38.2% retracement. Now, here it was very funny, because I was letting the members know in the Discord group that this was a zone that I wanted to add to our position in the SPY. I hesitated it because I wanted to be, a little bit more conservative and wait for a zone, wait for this area between the 38 and the 50% retracement to give me more of a less of a risk, if you will, because the stop would have been somewhere south here at the break of 371. I got a little greedy, but that's okay, because we still had a move, we still had a position on it, anticipating today's reaction, and sure enough, it was pretty bullish. So A, B, and C held the 38.2% retracement, and now we're looking to make our way up into the wave 3, which will take us to the $418.03 region. Now, that falls in line with this zone of resistance. Guys, this zone of resistance was pretty crazy, okay, back here between May 27th and June 9th when we broke below it, and we couldn't hold that support or this range. We were anticipating this to be consolidation to break higher, but instead what we got was consolidation to break lower, making the June 17th our low, giving a lot of people more idea that the markets were going to head towards 350. Now, maybe that could still be the case, but for now, we are going to operate under the assumption and interpretation that a bullish reversal is at play. Now, 418, which is the 100% extension of wave 1 versus wave 2, will get us to the 100, well, will get us to the 418 region. So that's my next target. If we don't reach, if we start breaking down, because Meta just reported earnings, there was a mixed bag between Meta. There's also other earnings that came out just today. And look, guys, just as a sidetrack, right? Side note, Fed released today 75 basis point, something that markets were expecting. Inflation may be peaking for July. Earnings have been pretty good. I mean, the recipe is there for a bullish sentiment, for a risk on event. All right, we may see August be a pretty good recovery month till we get the next Fed meeting in September, which the markets, as I said earlier in this video, the markets are pricing in a 50 basis points, and that means that the Fed is you already know. So pretty excited, guys. Let's take a look at our other count, right, which is a leading diagonal. Okay, this is all considering the wave 2 pullback, right? I mean, if I take you back out here, I haven't labeled it, but this is the wave 1 somewhere here, A, B, and C, right, into the wave 2. All right, so that's that. So back over to our 1 hour time frame, or 30-minute time frame actually, from our wave 2 low on June the 17th. Okay, we made our first high into the wave 1. Okay, we then pull back into this wave 2, right? A, B, C, pull back into the wave 2 to start confirming a ending diagonal trend line, right? We see these two lines converging into an apex. Okay, so 3 waves down, 3 waves up, 3 waves down, 3 waves up into the 5th wave. Now, why is this being brought to our attention? Is because we can see a potential divergence in the RSI, ladies and gentlemen, and that is, as I taught you before, indicative of a reversal. All right, so we have positive momentum on the price action, while we have divergence of negative momentum to the RSI. If we start rolling over, this is if we start rolling over, then this will be the count. All right, at which point this will become a bear trap. All right, so the wave 5 divergence appears at the end of the cycle, whether it's a wave C or whether it's a wave 5 of whatever higher degree we are counting, we will always find a divergence. Now, we are going to look for a right, retest of the B. Well, I'll show you in a minute. Hold on, look. A, right, break of this trend line. A lot of traders will be looking at that. We'll look for the retest of this trend line. Okay, let me zoom in so you guys can see clearly, because this will be pretty good if it plays out, right? Because just like the bears love to trap the bulls, right? We love trapping bears as well. Now this trend line, all right, let's do this again. This trend line has been set, and now I'm not the only one looking at it. I know there's a lot of traders out there that are looking at this, and they're looking at the break of it. Okay, they'll start positioning themselves around here, confirmation here for another short position that'll take them lower. Now because you guys are watching this video, will know that this is the A, pull back into the B, last leg down into the C to somewhere around between the 387 to the 382 region. All right, this will be a zone that we want to be participating for a long opportunity. All right, this area here, wherever the zone lands, we will take to the 3rd wave. Now, here's where we will trap the bears, because the bears will anticipate that markets will continue on lower, but we know that we know best. We just know best. All right, guys, we know that that may not be the case. So you got your marching orders, guys. You already know what to do. You heard it here in the channel. You heard it here at Trending Waves. Please, 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 please let me know your thoughts down in the comment section. If you guys have any questions, love to interact with you. Love to hear your thoughts and analysis. You know what? Let's just take a look at the bearish count, which at this point hasn't been updated, and I will work on one. But for now, we have invalidated it. All right, guys, we've broken above the C wave in a very impulsive and decisive manner above the 100% extension. And now I don't think this is it. I don't think this is the play. Now let me work on an alternate account. I was really excited to get this video out for you guys because truth of the matter is I've been calling this one out. All right, so thank you so much for tuning in. I won't review the Qs. If you guys want to see the Qs charts, jump on over to Trending Waves. If you want to see the Bitcoin chart, jump on over to Trending Waves. If you want any chart of your choice, Apple, man, we got Apple. Apple is about to break out. Also, we have Nvidia. We have the chip makers that I am eyeing like crazy for us to get on board on the long side trade. Till then, see you guys tomorrow. Bye bye.